Today I'm joined by Jason Labrum. He is the founder and owner of Labrum Wealth Management. My name's Tori. I work at Allison James Estates and Homes corporate office as part of our support team. Today's topic is finances, making sound decisions and adding real estate to your portfolio. So as always, I'd just like to say thank you to all of our viewers for joining us each and every week. It's because of you and all your shares, likes, comments, all that fun stuff that we're able to provide this education to you for free. And we always want to bring value to you. Doesn't matter what company you work for, where you are in the nation, we want to bring value to all agents. Just a couple upcoming events that we have. We do have Fun Fact Friday every Friday. Make sure you join that. It's where we teach you about a tool that's available to you that can help you in your real estate business. We also have our national webinar coming up on October 17th. It's all about lead management, and we are with Bubba Mills, who was on a broadcast with us just a few weeks ago. So let's just jump right into it, Jason. Thanks for being here this morning.
My pleasure. Thanks for having me. Sorry that I think I caused some of your technical difficulties.
No, that's okay. We forgive you. So do you just want to start by introducing yourself?
Yeah, thank you so much. My name is Jason Labrum. I am the founder and president of Labrum Wealth Management. We are an RIA, registered investment advisory firm here in Carlsbad, California. And we have offices kind of across the Southwest United States in La Jolla, Carlsbad, Temecula, Fort Worth, Texas, and Florida. Also about to have one in Scottsdale with Minnie Rockefeller in the next week or so, or a couple weeks. And I spent 6 years at Merrill Lynch, followed by 6 years at Smith Barney before in 2009 opening my own wealth management firm called Labrum Wealth Management, where we serve clients as full-time, all the time fiduciaries, which puts us in a small category of about 5% of all financial advisors who serve their clients as full-time fiduciaries. So that's me.
Oh, wow. Sounds very successful. I know earlier you had said you were in a few different states as well, so you guys are continuing to grow.
Yep.
Very cool. So I'm just going to go through and ask you a few questions. Let's just start out simple. What is today's financial market?
Yeah, it's an interesting question, a good question. First of all, the markets are at all-time highs, or at least what most people call the market. But one of the things that I think is important to understand is there's a total of 43,000 stocks that are traded across the globe. But yet, when we talk about the markets, or you hear the news talking about the markets, they're always referring to really one of three indices. And an index is a small basket of stocks. They're maybe referring to the Dow Jones Industrial Average, which is 30 stocks. They might be referring to the S&P 500, which is 500 stocks, or maybe the NASDAQ 100, which is 100 stocks. So there's 630 total stocks there of 43,000. So yes, the markets are doing really well, but everybody refers to the markets as those three indices, which is only 630 stocks. So there are certain markets that aren't doing well too. But it's an exciting time because we're hitting new highs on these markets. But I want to just help people think more globally about investing and realize that the S&P 500 is not the markets. It's one small sliver or one small piece of all the stocks, bonds, and or REITs that are out there, real estate investment trusts, that you can invest in. But locally here in the U.S., the markets are doing really well. Abroad, internationally, and emerging markets are not doing so well. There's probably a multitude of reasons for that, but it's an exciting time if you're looking at your statements right now. Unlike in 2008 and 2009, it was not a very exciting time to be looking at your statements.
Yeah. So we're getting better.
Yes.
Getting better. My next question, and I know you were a fan of this one when I told you, you said, oh, that's a good one. How can you make sure your financial decisions are rational and not emotional, which is so important?
It is. What's crazy is if you look at the average returns of investors in the stock market, people who buy mutual funds or ETFs, their return over the last 30 years, the average return of equity investors, so equities, that's a stock, right? It has about a 10% average annual return and has more volatility than bonds, but you can also buy bonds, which are less volatile. They have an average return of about 5. But if you look at what the average return of investors have been over the last 30 years, it's 3.98%. That's according to a Dalbar study that does a quantitative analysis of investor behavior. Say that 5 times fast. They do this report every year for 23 years. And what it shows is that investors actually do very poorly in stocks. Stocks don't do poorly, but investors do poorly. Investors tend to do better in real estate because they think of it as a buy and hold. I mean, as a lot of real estate agents will probably watch this, you think about people when they're owning real estate, they say, I don't care that it's down, it'll come back. Real estate always comes back. But yet when they own an investment portfolio of stocks or bonds or their 401k, they, it goes down and they panic and they make irrational, emotional decisions, which tends to destroy their returns.
Okay, got it. I do just want to remind everyone, I want to remind everyone to make sure if you have questions for Jason while we have him here, it's your time to ask questions. So comment in the video here and we can go ahead and do a Q&A at the end. If any questions come up, comments are welcome too. So I know it's really important, and I'm sure you talk to a lot of people about their goals financially, and I'm sure you hear a ton of different goals. It's so broad what it can be, but why is it so important for people to have their financial goals?
Well, I think I'm getting an echo. I don't know if you are, but hopefully the other listeners aren't. By developing a plan and setting your goals and objectives, you'll help yourself not make the behavioral mistakes or the irrational thinking. That's better now. Sorry, I don't have an echo now. Thank you. But
okay.
What happens is, the investors have had an average return of 3.9, but during the same time, the markets have had a return of 10%, 13% if you look at it globally, a really optimally constructed portfolio. So investors do 3.9, the markets do 10. How does that happen? It happens because as the markets go up and down, people tend to sell at the bottom and panic and get out, and people buy in at the top when it feels good and is easy. And that's the opposite of what you're doing, but the opposite of what you should do. But the way you avoid that negative, or I call it toxic behavior, the way you avoid that toxic behavior is by developing a plan. And when you have a financial plan which identifies your goals and objectives, I like to think of it as my big long-term 50,000-foot goals, and then start narrowing back into my year-to-year goal. By having a plan and sticking to it, you can be so much more successful and so much more rooted in sound investment philosophy and decision making, as opposed to being hyper emotional given whatever the sensationalized media happens to be pumping at us that day.
Awesome. And we are talking to real estate agents, and I know we talked about this a little bit before we started, but they're all independent contractors. So should real estate be a part of your portfolio or your investment portfolio?
Yeah, we construct target return portfolios or multiple portfolios, so we can help clients who are really conservative or people who are really aggressive, and anywhere in between. But in every one of those portfolios, real estate is a part of that portfolio. Mm-hmm. We use liquid real estate through REITs, real estate investment trust, where we get globally diversified exposure to not only apartment homes, but residential and commercial real estate of all sorts. So yeah, we love real estate as part of the portfolio. I personally own a good amount of real estate myself, and I think it can be a great investment. It's a little bit hard as an individual to buy real estate as an investment because the capital needed to acquire it, and then also people tend to not do the appropriate accounting and look at what are all the costs associated with that real estate, and what is my capital return going to be? What is my CapEx if I invest $100,000? If I'm getting back net $2,000 a year, I have a CapEx of 2%, which is not that great, right? You can do much better other places. But yes, we like real estate. Think it should be part of the portfolio. The higher your net worth, the more opportunities you have to go, I think, get diversified appropriately in real estate. But even people who don't have a high net worth can get invested in real estate through REITs, real estate investment trust, and get massively diversified and get great returns on that over time. So I think it's a good point and a good piece of portfolio, part of the allocation. But you also mentioned independent contractors. And one of the things we've done a few presentations for independent contractors and real estate agents particularly, we have several real estate agent clients where we're helping them because they're in a really unique situation where they don't often have employees because they're an independent contractor and they're selling homes and doing their thing, and they receive their 1099. You have a phenomenal opportunity as a real estate agent to save money on a tax deferred basis. I have one real estate agent client who makes a lot of money, does very well, but he's putting away in the neighborhood of $220,000 a year tax deferred, reducing his taxable income by over $200,000 a year, and has been doing that for years. And he can do that because he doesn't have any employees. Me, I have several employees, so if I put money into a retirement plan, that much money, I would have to also do that for all of my employees to some representative amount, which gets really, really expensive. So the opportunity for personal and individual financial planning for real estate agents and 1099 contract employees is phenomenal. Solo 401ks, SEP IRAs, even simples, there's just so many defined benefit plans, cash balance, profit sharing plans, so many great ways to save money. So we can help you if you're interested in learning more about that.
Yeah, definitely. And kind of piggybacking on the question I asked before, how can a real estate agent make sure to talk to their clients about having real estate in their portfolio, and why is that important?
Yeah, I think it just falls under the overall asset allocation, right? You can get rich by concentration, but you also can become broke by concentration, right? Because if you have all your money tied up in one asset class and that asset class doesn't work, it can destroy your wealth. So, we're pretty big fans of just making sure that we're allocated and we have money spread across different asset classes. Going back to the intro when I talked about the markets, and people say, what is the market? And everybody's referring to the S&P 500, and that's not really the market. That's a tiny piece of the market. So yes, the S&P 500, that's U.S. large company stock. That should be part of your portfolio, but so should mid-sized companies that are in the U.S., and so should small companies that are publicly traded in the U.S. And yet people don't talk about that when they talk about the market. And international stocks, large, mid, and small, and global stocks. And real estate's just another piece that makes sense there as part of the allocation because it's a diversifier. And sometimes real estate does well when the stock market doesn't do well. Although over the recent 20 or 30 years, they've become more correlated. They kind of move together. So there's not a massive diversification multiplier there, but it does help some for sure.
Definitely. Before you continue to tell us more about yourself, of course, we want to hear all about you and the things you've done. Do you have any last minute advice for our agents? Any last minute anything? Just to kind of wrap it all up.
I think as an agent, they're a lot like a financial advisor, and they have to go out and get clients, and they have to build relationships. And for me, I started in this business in March of 2000. I started in 1998, but I was in a 2-year training program. And then in March of 2000, I started building my own clientele. And if you think back, March of 2000 marked the beginning of the lost decade, where if you were invested in that S&P 500, March of 2000 until March of 2009, you were down 9%. So you invested for 10 years, your money was tied up, and you literally lost 9% over a 10-year period. It's horrible, right? It was a really tough time to start. So I think it transcends across advisors and real estate agents. It's a tough business. If you do it well, you can be very successful, but you have to just be persistent. You have to be persistent and organized and stick through it. And it's the same with investing in general, whether you're consulting a client on buying a real estate investment property, they have to have a discipline and a staying power because sometimes it's not fun, right? As an investor, even as an agent, as a financial advisor, it's work. It's not supposed to be fun and always fun and glorious, right?
Yeah.
It's work, and it takes discipline and structure and patience and perseverance and all of those things. So I think that's the one thing that I've learned in my career where I learned it by luck, is just being persistent and tenacious allowed me to get through those tough times and come out of it. And there might be some tough times ahead for not only financial advisors, but real estate agents. As you look at interest rates rising, I can't help but think that's going to slow down the housing purchases and sales. I mean, refis are already done. If you look at most mortgage half their business is gone because of the refi market drying up. There's going to be a tough run ahead. So save money when the times are good.
Yeah.
Get your accounts stocked up and be patient and persevere through those tough times.
Yeah, persistent yet patient. Those are the key
Yeah,
words.
exactly. Well said.
Yeah. So just to wrap things up, tell us how people can find you. And if you want, tell us a little bit more about what you've done in your career.
Labrumwealth.com is our website, and that's how they can find me. I just published my first book this year.
Congratulations.
Financial Detox, yes. So if anybody would like a copy of Financial Detox, send an email and say hi, and I'll send you a signed copy of the book for watching this Facebook Live. So I appreciate that. But, it's so labrumwealth.com. You can give us a call, shoot an email. We are growing our business. We're taking on new clients so we can help and just, we want to break down the traditions of our industry, which is convolutions. It's a lack of understanding on the part of the clients of what people are paying in fees and expenses. And there is a new revolution happening in the financial business, albeit it's small, because the powerhouse firms and the big firms that stand to make a lot of money by not being transparent are rejecting the movement that myself and the other RIA firms are starting across the country, which is putting our clients' interests before our own. Taking care of the client, number one, knowing that we'll get paid at the end, and disclosing how much we get paid and what we get paid so the clients can make good decisions. That's really the mission I'm on, and you combine that with helping people become detoxified from a financial perspective, because there's so many toxic financial thoughts and toxic things that go on when it comes to investing your money. Behavioral blunders, people destroying their returns, people chasing hot stocks, and so on and so forth. And that is, that's a thing we want to help people so they don't get the returns of the average investor at 3.9% when the markets have done 10 to 13%. That's a bad break, right? Millions of dollars for people, hundreds of thousands, maybe millions of dollars for people by investing correctly and not making mistakes. So that's what we're all about. That's what we're here to help people do. And it's working well so far, and we want to just keep doing it.
Well, that's awesome. Well, thanks for being here.
Yeah.
I do have I have two websites. I have labrumwealth.com as well as financialdetox.com.
They both work.
Perfect. Don't forget that if you do want Jason's book, he is offering it to our viewers today for free. Go ahead and go to labrumwealth.com and you can contact his team directly there. The other thing I wanted to mention is that you have a podcast, and it's the Financial Detox podcast.
Thank you. Yeah.
How can people find that if they want to listen more to
you? Any podcast player you use, whether it's iTunes, Stitcher, podcast player, Google Play, you can search Financial Detox and you'll find it. Right now we're doing a show every other week. That's going back to one show a week. And my co-host Alex and I, we just get on there and kind of go nuts and talk about everything financial and saving money and investing and not making behavioral blunders. And sometimes we talk about guns and politics and all that too, which I'm a recovering political fanatic, so I try to not do that so much. But it's a lot of fun, and I think we provide a lot of good information. All that's on our website too, financialdetox.com. You can get show notes and all the previous podcasts. I think we're probably pushing about 100.
Wow.
Might be 100. We're recording one here in about an hour or so. So
very cool.
I'll go right from this to that. But yeah, we love it, and we'd love you to check it out, listen to it, and say hi to us.
Yeah, definitely. Well, once again, thanks for fitting us into your busy schedule. I know you're a busy guy, and we definitely appreciate it, and I know all our viewers appreciate it as well. Despite all the technical difficulties, I think it worked out.
Yeah, because of your talent. You got it done, Tori. Good job.
Thank you. I appreciate it. Well, thank you, everyone, so much for joining us today. Don't forget to join us next week. Next week, we are joined by freedom strategist Tina Kadish. She is going to be talking about the 4 keys to attracting your ideal client, so you won't want to miss that. Jason, thanks again for joining us and bringing so much value and insight to our viewers, and hopefully we'll talk again soon.
Look forward to it.
All right.
Thanks.
Bye, everyone.
Bye-bye.